Good morning, guys. Armand from Cool Trading Tools here. So we have a big gap down overnight. I don't think a lot of people, including myself, were expecting it. So let's kind of go over a little bit about what this means and what's causing it. I actually had a little trouble finding a definitive reason for it this morning. I saw some things about war. I saw some things about Oracle cutting jobs, but ultimately it looks like we're pointing towards the Korean market, South Korea. They have some things going on with. Well, first, a couple of things. The narrative in AI is changing, which is something that I've been seeing kind of go for a long time. Here and during this run, it's kind of like constantly like AI is going to change the world. AI is this, AI is that. Every company is getting prepared for it. And now, actually, over the last few weeks, we're starting to see some things like this. Companies like Meta, Oracle, we are cutting jobs because we don't need as many employees anymore, and we are cutting, like Microsoft cutting the AI usage for its employees because it's costing more than it's worth. And now Korean companies are pivoting from chip makers to making DRAM, which don't fully understand all of it in that sense, but it sounds essentially they're pivoting, right? And to less AI important things and more into hardware. Long story short, a lot of the finer details aren't important, but what we're seeing is a shift in the narrative, right? So what happens is markets are narrative driven, whether it's a good narrative, even it doesn't matter what's actually happening. If people think it's good, bad headlines will get bought up, good headlines will get bought up. If people think it's bad, good headlines get sold, bad headlines get sold. And you can start to see when the response to different shifts in the AI, what companies are doing, are getting negative reactions and being turned into a negative. And that can just be a little bit of an anecdotal thing that you notice once you've seen this a lot, is you kind of see things are changing, right? So I've been noticing that actually for the last few weeks is a lot of more negative sentiment headlines and the market reacting negatively to these things. Long story short, yeah, Korea, it looks like they gapped down about 10% overnight, not a small gap down. And that's causing some fear, and everybody's leveraged in, for this breakout. If you look at the SMH, which is now down 5%, it was breaking out to all time highs. People were kind of like bull run on. This is causing a lot of people to liquidate overnight. Even SpaceX yesterday, big liquidation at the end of the day, has now came from 225 down to 150. We're seeing a little bit of like the enthusiasm changing in the market. So just something to be aware of. Don't need to put a ton of weight into that. It's kind of honestly complex, and it's a little bit better to probably just rely on the technicals, which are easier to read. So let's look into the plan for the day, right? So I said Nasdaq is gapping down, 2.5%, SMH down 5%. These are pretty large gaps. I'm not going to be chasing anything down, especially off the open. You got MU down 6%, Intel down 6.3%, Nvidia, I'm sure, is down 2%. So what do we do here, right? So this is kind of my plan here. When the market gets a lot more volatile like this, specifically in bear situations, what happens is everything's going to move together. If Nasdaq bounces, semiconductors are going to bounce. One of them might be leading the other. MU is going to bounce. Nvidia is going to bounce. Tesla's going to bounce. Everything's going to move up together and down together, right? So in these situations, you don't need to have large watch lists. And ideally, you find one or two liquid names that have a lot of volatility, but also a lot of liquidity. And you can just trade that back and forth with the overall market direction, right? Here's a little hint too, as well. You can watch SMH and QQQ, have them two side by side charts like this somewhere. And oftentimes you will see an early signal. Maybe you're watching a QQQ, right? You might see SMH start its bounce maybe a minute or two before, vice versa on that. You don't know what's going to happen, but you can watch for that correlation, and it can give you a little bit of an early signal in these. So let's just say I'm probably going to be trading TQQQ today. I was thinking SMH, I trade Soxel. I just don't like the price range. It's a little high, 250, 300. I'd rather trade the leverage ETF on Nasdaq, TQQQ. I just like this price range better. But let's just say I'm watching TQQQ, right? And then I see SMH start its bounce. You might see that 1 or 2 minutes before, and as a day trader, that's all I need is a little bit of early signal to be like, okay, get ready. You can anticipate a little bit. And I found some really good trades and just playing a little bit of a slight laggard when you find things that are heavily correlated. That doesn't mean they're going to be correlated, but it's something to watch for the day. It could be the other way around. You might see the Nasdaq bounce before semiconductors. But the point is you can watch some of these major sectors, and when you see correlated stocks or correlated sectors, you can see if one of them is giving a little bit of an early tell to the other. So what's my plan for the day, right? So I said I'm not going to be shorting into the hole. I do think this is a little bit going to cause some unease. Markets were really ramping the last few days as well. This semiconductor, they were all, MU's got its earnings, I think tomorrow. Yeah, tomorrow. That was ramping up. Intel ramping up. Everything was just going, right? So I think that there's going to be some people caught off guard in this situation. So we're not going to chase this down. Like I said, 5% gap down on SMH, 2.5% on the Nasdaq, too much. So what's my plan? I'm going to actually look for a short term. This might be a very quick trade bounce at the open. I think that's a very likely scenario. This might only be a 5-10 minute bounce, but the volatility is going to be there today. So you can take a quick little scalp to the bounce and long side. Then I'm going to look as we get closer to the gap fill. I'm going to be looking for areas where we might stop and look for a short, maybe into some of these previous supports or et cetera. We don't know necessarily where. What we're going to be looking for is once we've got a little bit of a bounce underway, we'll look for an area to short into, probably confirmation on the 5-minute charts, whether it's a moving average running into, etc. And then what we do, if we get that momentum candle on the 5-minute chart, we'll enter a short and we'll look to get some follow through. And when we get to 1R, like let's just say we short at 180 with a stop at 81. When we get to 79, 78 area, we'll look to cover half of the position, and then we can kind of just sit in our hands and see, did we catch a top, and are we going to fade back to lows for a larger move to the downside here? And that kind of comes back to like a famous book called Trading in the Zone, huge in the trading world, where it's like what we're trying to do here is we don't know what the market's going to do. I don't know if it's going to bounce, go back to lows. I don't know if it's going to bounce and rally, but we're going to look for a signal. I think there's going to be people that are underwater here that are going to look once we bounce, be like, all right, get me out of here and take it off. I see people in the Discord chat saying, oh, 10% swing in my account overnight, etc. So people are going to look to unload into that bounce. The book says you put yourself in a position to just participate in the move, not necessarily predict. So when we see people starting to be like, okay, we bounce, hit that, and like they start taking some money off the table and we start to move back lower, we short, take some off, put a stop over the high, and then we just allow ourselves to be in a position that if the market does want to continue lower, we are now in a position to capitalize on that. And given the volatility, if it's a right situation, we'll be rewarded with that. And that's really what trading is. It's just putting yourself in a position to capitalize, not predict. You find situations where the market's going to be volatile enough for you to profit from. You try to find an area based on technicals, etc., news, all these different factors, and you put yourself in a position to capitalize on the movement. So that's going to be my plan looking into the day. Keep it simple. 1-2 names. Watch the correlation between semiconductors and the Nasdaq. Look to get long off the open for a short-term bounce. Look to short into the bounce when people start taking money off the table after the bounce. That's the plan to see how things play out. If things shift, for example, say we do drop heavy off the open, that's another scenario where we just open and we drop another 1 or 2%. That changes things. Now the play would be actually now the Nasdaq then at that point is down from 2.6% down to 3.5%. Enormous down move. It doesn't happen more than a couple times a year, really. then we're in a situation where we're looking to get into a bounce trade where we can look to hold for a longer upside move. So then the plan changes, and then those situations we look for something like a bear flag, a break a break lower, but immediately recover like a hammer candle, and we can get short with a stop below that, get long on that. Like say we're 3.5% down on the Nasdaq, get long on the failed breakdown. These are just ideal situations. It's tough because I've seen a lot of situations, so it's easy for me to react in live in the moment. I'm just trying to lay out some of the situations that could happen. So like if we faded off the open, I look for us to like move lower, then look for a bear flag that fails, get long off the failure to move lower for another continuation, or one of my simple ways is just to use a 5 minute trend change, right? I'll give you a good example here on SpaceX. This would be like a great example of like when it opened up on this day right here. Nobody knew how high it was going to go day one here. I actually shorted on this day, but what did I wait for? It was moving higher, moving higher. Then we got short on the 5 minute trend change right here. I anticipated a little bit. I got it like 171.80 here with a stop over here, anticipating the 5 minute trend change. And what did that do? That marked the lower moving movement. So what do is when you're looking on the higher time frames, like I think this is going to go like this. Here's another great. I'll show you on the hourly chart how this works. You can look to see on the lower time frames when the trend changes for like the longer term move. So the daily chart's moving up here, right? What signaled the changing character on this chart? What was it? The hourly trend change. So higher low, higher low, higher low, right? Then what do we finally get a change in? The hourly chart. Let me just delete all of these. It's kind of in the way. What do we get a change? The hourly trend changes to the downside. What does that do? That signals the fade on a SpaceX for the long term. You can use this same correlation. If you're trading on the hourly chart, look for the time change, the 5 minute trend change on the 5 minute chart to be the signal. If you're looking to trade on the daily chart, look for the hourly chart to trend change to be the signal. And you can use these a lot to kind of look for more precise entries on your desired time frame. So today I'm just day trading. My desired time frame is on the 1 day daily chart. I'll look for the trend change if we move lower on the 5 minute chart as an area to get long for the bounce for. That would be a signal to me. And then you put your stop below the low, and that gives you an entry that's usually a low risk reward. That is a more confirmation signal on that. So that's going to be my plan for the day. Volatility is going to be picking up. I don't really fully know what all this means, and I don't think many people do. So it's a little bit be safe. Oh, one more lesson too. A lot of people were saying in the swing trade, in the room, that they're down 10% in their account overnight. A lot of people were leveraged into that. If that's one of you in those situations, this is how a mentor told me to handle gap downs and swings a long time ago. Don't panic at the open, right? This is such a big gap on SMH, almost 6% down. He would say is don't panic. He wants to sell into a bounce, but he would wait for an opening range and use that to define his risk. If we can hold the opening range high, like it might dip below that, but if it doesn't continue lower, use the opening range to decide, like, do you bail out? Here in this situation, I think you really want to wait for the bounce. I'd be very surprised if we just drop 10%. It can happen. Be protective. Don't put yourself in a situation where it's going to really damage you. But that's what he would always tell me. Gap down, wait for the opening range to form, and put your stop below the low. Don't just panic right at the open. So come up with your plan beforehand, stick to it, and have a good trading day, you guys.